Well, hi everyone, and welcome to the Buffett and Beyond Research Stock of the Week, and we're going over Taiwan Semiconductors, and this stock is out almost 3 times the S&P in the past 5 years. And remember, folks, if you want to live on this beach like Jimmy Buffett used to live at one time, you've got to invest even better than Warren Buffett does now. And let's go over a few things. Taiwan Semi Manufacturing pioneered the dedicated semiconductor foundry in 1987 and is the world's largest dedicated foundry. And Taiwan accounts for 70% of the global semiconductor manufacturing market as of recent industry estimates. And that's a record high driven by strong AI and high-performance chip demand over the past year and a half or so. Taiwan Semi is a primary supplier of chips to the industry. Heavyweight NVIDIA, well, we've all heard of that stock, and that augurs well for sales growth moving forward, thanks for the strong demand, again, for AI-related chips. And annual manufacturing capacity at the end of 2024, 16 million wafers, and has about 76,478 employees. And one more thing, yes, Taiwan Semiconductor Manufacturing is significantly expanding its presence in Arizona with a $165 billion investment, including building multiple semiconductor fabrication plants, advanced packaging facilities, and a research and development center foundry. So, folks, it's coming to the USA, or it already is here. Now, let's take a quick look at the chart. The blue lines represent the average stock, and the green lines are Taiwan Semiconductor. We're looking at the clean surplus return on equity, and for Taiwan, it's 34%. For the average stock, about 13%. So we're looking at almost 3 times that of the average stock. With the net income growth, 13% for the average stock, 28% for Taiwan Semi. And when it comes to revenue, we're looking at the average stock of 7.1%, and Taiwan is 22%, which is 3 times that of the average stock. So we could see that Taiwan Semi is beating in all areas relative to the average stock, so we would expect it to perform better than the average stock. Let's look at the numbers a little bit closer, and what I want to show you is here how the clean surplus ROE has gone up over the years. This is the 10-year average down here, 5-year average, 3-year average, and we can see that, boy, oh boy, it's nice and high in here, and it has stayed high in here. Retention rate 79.2% for 2026, which means it's taking about 80% of what it makes and putting it back into itself in order to grow. Years to pay debt, only about 1 month, folks. It could take all the money it's making, and this is Buffett's rule. If a company takes all the money it's making and puts it back into itself in order to pay off its debt, how many years would it take? His rule of thumb is 5 years or less. We kind of like 3 years or less, and this is 1/10 of a year, which is about a little over a month. And the recent dividend, 1%, we want to see them keep that dividend low so they keep putting more money back into themselves in order to grow. Now, one thing I wanted to show you about this net income over here, which are the clean surplus earnings, is that the stock trading around 358 as I'm recording this, and that is about 28 times forward earnings. Now, the S&P has been between 15 to 25 times forward earnings, so the average stock has been as high as 25 times, but at one time it was actually 100 times the forward earnings, which this is for the S&P, which is kind of ridiculous for the entire S&P 500 to be that overpriced. But anyway, Taiwan Semiconductor is at about 28 times forward earnings, which is not that out of control, folks, because some of these stocks are 100 and something times forward earnings, which are really, really hard to stomach at this particular time in any kind of market. So anyway, Taiwan is nice and consistent, highly priced because it's growing very, very quickly. I mean, look at this growth in here. This is very, very nice. In fact, if we look at just 3 years ago, we're trading at where expected to earn more than twice or 2.5 times what it did in 2023. That is strong growth. So we like Taiwan Semiconductor, especially now that it has a presence in US of A. And let's see what it's done over the last 12 months. Black line is the S&P 500, up about 11% over the past 12 months. And folks, the average for the S&P in any 1 year is about 10%, 10.4% over any 10-year period. That's the index itself. And Taiwan is up. So no, what I was getting at is that the S&P 500 is about normal for the past 12 months. Even though it's been higher than that over the past 4 or 5 years, it's done very, very well because we have a lot of growth in this country at this present time. And Taiwan is up 81%, so we're looking at almost 8 times that of the S&P over the past 1 year. And over the past 5 years, it's up 189%, with the S&P up 74%. So again, 5 years. And we could see that Taiwan Semiconductor came down, and that was because of China, and Taiwan over there was part of China at one time and probably still is, but it's always a political situation, and that's why this stock sunk so low, or I shouldn't say so low, but lower than the S&P 500 back a couple of years ago. And don't forget, 2022 was this period right in here, and that was a down year for the market. The market was down 19.6%. The NASDAQ was down 34%. So you can see how the NASDAQ really hit semiconductors and tech stocks because Taiwan was down more than the S&P in 2022. But look how it came back, came roaring back. So it's done very, very nicely. And over the past 1 year, it's up, well, with the market up absolutely nothing. In fact, it's, as I'm recording this, it's down a tad, and Taiwan Semi is up 18%. So it's doing good done very, very well over the past year to date, over the past 1 year, and over the past 5 years. So we like Taiwan Semiconductor, especially now that it is divesting itself of some of its manufacturing capacity and coming here into Arizona and putting up some of its factories. We like that very, very much and feel much safer about Taiwan Semi. So, folks, we had another tough week in the market, up and down, up and down. It's in a narrow trading range, and sooner or later it will break out. And the way we're looking at the economy, unless something politically happens, the breakout will probably be to the upside. But of course, anything can happen any place around the world. The U.S. is talking to Iran and talking stuff, and boy, oh boy, we just never know where it's going to go. So meanwhile, go out this weekend, get your mind off the market, go for a walk, go for a swim if you're down in Florida. But most of all, be safe. And folks, we'll see you right back here in a couple of days.